Hello traders, Gary Wagner here. It is just about 11:30 in Honolulu, 5:30 in New York on Friday. Happy Aloha Friday, as we say on the islands. It is the 13th day of June, 2025, and this is the evening report for gold and silver, our weekend review. Gold reached unprecedented heights today as escalating military tensions between Israel and Iran triggered a powerful safe haven rally, taking the precious yellow metal to an all-time record close. The surge in gold prices was a direct response to Friday's significant military exchange as Israel launched over 200 targeted airstrikes on Iranian nuclear facilities, their scientists, and senior military commanders. As what was characterized as a major ongoing operation, Iran responded swiftly by launching a major offensive into Israel. The resulting military action, both of Israel as well as Iran, took U.S. equity markets lower as investors flocked into a protective asset, gold, the best safe haven asset during times of geopolitical strife and action. Gold closed at its all-time record high of $3,452.60. This basis, the most active August contract, taking out the former record that came in just above $3,440 on the 6th day of May. Spot gold also hit a record of $3,432, a new all-time record closing price.
Silver will close out the week 24 cents higher after making substantial gains on Monday and testing $37 for the first time in over a decade, and then subsequently fizzling out for the rest of the week.
So traders, the question becomes, where could gold go from here? Specifically, the result of today's military action by Israel and retaliation by Iran. First, I believe this is far from over. Israel has announced that they have ongoing campaigns, and Iran has responded by saying that they will respond in force. I believe that this could cause gold to go higher. We are now at the highest closing level in history, just above by a few dollars, the all-time record high. And the next mark, of course, is going to be for gold to trade above 3,500, the all-time record intraday high. The question is, can this event take gold past the all-time record high on a closing basis? And if so, where do we believe gold could trade to? I believe wholeheartedly that the military action on the part of both countries is far from over, first. Secondly, I believe that will move the needle higher or prices higher in gold. That being said, what I have done is calculated a basic Fibonacci extension. I'm going to modify it just a little bit to account for the low that came in on May 15th and do our Fibonacci extension from the move from just below 3,000 to 3,500 and begin our extension at the low achieved middle of May. That being said, you know that I am on record stating that by year-end, gold will trade between 3,600 and 3,700. With this military action, if it continues, I need to A, modify my timeline for gold to get there, and most importantly, modify my upside target. In addition to the Fibonacci extension I put in, I also want to address our current Elliott wave count. We are under the assumption that our primary fifth wave occurred when gold traded above 3,500. That began a basic ABC correction, labeling this as A, B, C, which means that what we have experienced from about the middle of May when we hit these lows here is the beginning of our next cycle, a series of 5 waves with our current wave count being wave one or our benchmark wave. Our benchmark wave is always the most difficult because we use that to ascertain what waves 2, 3, 4, and 5 will do. Without that, we are postulating. That being said, my sense is that this current rally will easily take out 3,500, could go to 3,550, even 3,600. Again, it is a benchmark wave. However, what is really important is my timeline for my projection of gold hitting between 3,600 and 3,700. I believe that that will occur much sooner. Realize that what we are witnessing right now is unprecedented. It is historical. We have a new all-time record high that is occurring during the benchmark wave one, meaning if that is correct, gold has a great distance to move to the upside to complete this cycle. Our long-term view is going to go into 2026. The reason being is when we look at this last 5 count, a full Elliott wave impulse phase, it began at around 1,800 and concluded at 3,500. And traders, that was a move of well over $1,500. Assuming that this next full wave count is much less, even 1,000, and begins at 3,100, we are looking at $4,000 gold by the conclusion of this bullish cycle. This has been Gary Wagner,
and Joseph Wagner.
wishing you as always good trading.
We'll talk to you on Monday for our next video report.
Bye-bye.